Welcome back. This is Rosy Barik, Assistant Professor HR. I am going to discuss about human resource accounting of human resource planning. This is Block 3, Unit 10. Code is MMPH003. So, first of all, we should know what is human resource accounting. It is to measure the cost and value of the people. People means the people who are working in the organization, like the employees and the managers in the organization. It also involves the cost incurred to the recruitment, hiring, training, and development of the employees as well as the managers. So, in this topic, we are going to discuss about the introduction of human resource accounting, concept of human resource accounting, objectives, history or evolution of human resource accounting. It is a process of measurements. So HRA process, group value measurement, cost in human resource assessment, advantages and disadvantages. So before starting is, we should know what is human resource accounting. It is, as I have already told, that it is the measure of cost and value of the employees or managers who are working in the organization. So first of all, HR or human resources are considered to be the most valuable and very pivotal role playing factoring in the successful operations of policies and practices and the competitive positions of the business enterprises. So we can say that people and the managers are the asset of the organization. So therefore, to make any policy or program, it is imperative to have the effective and skilled human resources. And even more essential is their management process. So the human workforce incorporates huge outlets and cost of an organization. So conventional accounting system do not provide all the essential requirements, informations on the cost and value generation of the employees of an organization. Such information can be gathered through human resource accounting. So it is also to find out the present economic values of the organization or the present economic values of its employees and the managers. So, after measuring the cost and value of its employees and the managers, the organization prepares a report, and this report is called Human Resource Accounting Report or HRA report. This report shows the top level management. It can also be shown to the employee managers and outsiders like investors or customers. So, what are the concepts? The human resource accounting is an accounting process of identifying, classifying, measuring, summarizing, and interpreting the results thereof related to the human resources of an organization. It is also about collecting and analyzing quantitative data of employees' compensation practices and its benefits. It is also a tracking tool that tracks and monitors employees' cost and value generation. It includes compensation, performance of the employees, and training and its benefit. So, HR professionals or the managers may employ various methods and tools to track and analyze the data such as employee service book, performance review report, compensation report, etc. So overall these reports are known as, or we can call it as HRA report. So HR accounting not only tracks and monitors the employee's performance but also maintains a records of organizational performance as a whole. So through this HRA report, it helps in maintaining the professional of the performance of the employees or managers and also the performance of the organization. So an HR manager may be asked to track the success rate of recruitment and retention initiatives of an organization. And the success of measures adopted by the organization to maintain high morale and satisfaction of the employees. So, HR accounting forms a substantial part of an effective human resource information system, and it is necessary for an organization if they are interested in knowing the effectiveness of its employees and to what extent they need to improve or change its HR policies and procedures. So it incorporates an accounting system of measuring employees' effectiveness, investment in human resources, their replacement cost, and accounting for the economic values of an human resource of an organization. So overall, we can say human resource accounting is the process of identifying and measuring the value of people within the company. This information is very crucial for the management to navigate the changes in the quality as well as quantity of the workforce. It ensures a balance between the required resources and variable or available human capital. So these are all about the concept of human resource accounting. So here we can say it is a process of identifying, classifying, measuring, summarizing and interpreting the results thereof related to human resources of an organization. Through this HRA, we can find out or we can track and analyze the data such as employee services book, performance review report and compensation report and any other reports. So overall the collection of this report is known as HRA report, which is very beneficial for the performance of the employees as well as for the growth of the organization or organizational performance as whole. So this report can be shown to the employer, to the employee as well as to the outsiders. The outsiders are known as customers or we can say the clients of the environment or we can say the client of the organization. So what are the objectives of human resource accounting? Here the objectives we can say human resource accounting brings out a process of effective measures to support human resource audit process. It develops reliable measures to the effectiveness of the human resource of an organization. To know the effectiveness of human resource policy of an organization, evaluation of human resources is required which can be efficiently valued and assessed using HR accounting methods and tools. So, human resource of an organization in any service-oriented firm entails huge investment. It also supports the financial decision making, HR accounting system, which may provide significant information related to human resource investment and return generated. Such information provides based for deciding the budget for the next accounting year and the process keeping in mind the HR policies, procedures, requirements of the HR department. So, based on the requirements of HR department as well as the organization, the information can be provided. So, the inherent nature of human resource management is qualitative decision making. So, HR accounting or human resource accounting provide some sort of concrete numerical data, that is quantitative data on which crucial decision can be taken to further enhance the HR functions. So Likert in 1971 has also mentioned the objectives of HR accounting in an organization. With the help of human resource accounting, the cost and value information can be obtained, which helps in managerial decision making concerning acquiring, deploying, and developing and maintaining the human resources. So, resources. So, it is very crucial part of human resource accounting that Likert has suggested. The human resource accounting helps managers to monitor human resource effectively. A sound and effective base for human asset that control can be achieved with it. It prepares the classification and development of human resource principles by classifying the financial cost and benefits of various practices. So, HRA is an essential tool for senior manager of an organization to understand the nuances of human resource functions and its effectiveness. Information drawn from such tools helps with critical HR functions like identifying, selecting, developing, placing, utilizing, evaluating, and rewarding the human resource reasonably and properly. So, what Likert has suggested, which is very important for every organization, which helps in minutely observation of the employees as well as the organization. If we'll see the history of human resource accounting, its stages started from 1960 to 1966. This is stage 1. It is the beginning of academic interest in area of HRA or human resource accounting. Stage 2 is 1966 to 71. It focused here was more on development and validating the different models. Stage 3, that is 1971 to 76, this period was marked by widespread interest in the field of HR. RG very experiments concluded substantially during the stage. Then stage 4, that is 76 to 1976 to 80, this was the period of decline of this area of human resource management, human resource accounting. And stage 4, that is 1980 or 1990 onwards, we can find out there is a sudden renewal of interest in the field of HRA. So how this accounting process was evolved, gradually it increases at the certain period of time. There is the lack of interest in human resource accounting and it was declined to certain a level. After that, 1990 or 1999, we can find again the renewal of interest of human resource accounting. So in theory, we can say the development human resource accounting found to be originated somewhere in the 60s, according to R. G. Flamhodge in 1999. According to him, the development phase of human resource accounting can be divided into 5 stages. The evolution of HRA is divided into 5 stages. Stage 1, as I have already told, that is 1960 to 1966. Stage 2, 1966 to 71. Stage 3, 1971 to 76. Fourth stage, 1976 to 80. And fifth stage is 1980 onwards. So here we will be discussing. In first stage, it is the early stage was initiated when academic interest in the field of human resource accounting was there. So during that period, the concept of HRA was found to originate from other studies like psychological theory of leadership, capital theory, emerging concept of human resources and corporate goodwill measurement. Stage 2, that is 1966 to 71. During this stage, the period, efforts were made to develop and validate various human resource accounting models. These models have characteristics of evaluating cost and value, or we can say monetary and non-monetary of human resources. This model were more statistical and systematic to assess and manage their human resources effectively. Third stage, say 1971 to 76, this period was breakthrough due to substantial interest in research area of human resource accounting. More stress was out on the issue of application of HRA in an organization. Stage 4 says about 1976 to 1980. This period was found to be declining phase of HRA, initially due to narrow understanding and investigation of human resource accounting as a concept. This period required more deep and empirical research in the field of HRA than that of previous period, which had a simple HRA model. However, the organizations were in no support to invest in this area of human resource studies. So the final stage or the fifth stage, 1980 onwards, this period witnessed the growth and interest again in the field of HRA partially. This attention in this field was due to sudden change in the economy from manufacturing to service oriented that critically and majorly issues or majorly uses the human resources as the factor in the production. Since now the organization was declining more with rendering quality services which required an intellectual, skilled and creative workforce, that need was felt to have to measure the HR effectiveness and accurately. So here we have found the 5 stages of evolution of human resource accounting from starting to till date, how the stages was developed, how the stages was declined, again it repositioning itself in a particular point, which is very important for current scenario. So first of all, auditing process, or we can say that accounting process or the process of human resource accounting, it says HR accounting, first we have to find out the accounting objectives which leads to developing human resource accounting measurements, the tools through which the human resource accounting can be measured, which leads to develop a resource accounting database through which a database can be developed. Then the pilot study system can be done, or pilot testing the system will be done. Then final stage is that implementing the human resource accounting system. How the accounting system will be implemented in the overall of the organization, that can be identified. So first is human resource. See, here it is mentioned that human resource accounting, a process of measurement. Obviously, in the previous diagram, we have seen that how the developing of human resource accounting measurement. So there are various approaches are there through which the process can be measured. The cost approach, the replacement cost model, opportunity cost model. These are the approach through which human resource process can be measured. So human resource accounting is the process of measuring the effort of human resources, cost of HR, investment and value generation. This process of highly complex and challenging, as it is quite a difficult task to assign monetary values to each HR dimension. Usually, two main approaches are followed in human resource accounting. There are cost approach and another one is replacement cost model or opportunity cost model. The cost approach is the human resource accounting model mirrors the valuations of physical assets, calculating the lifetime cost of an employee. This involves quantifying the expenses like recruitment, training, and development against the revenue generated by the employee through their training, through their tenure. Next model is says the replacement cost model, through which companies using HR accounting often maintain records for the potential future replacement. When an employee departs, the cost associated with hiring, selecting, and training a new employee are taken into account. If this cost exceeds the potential benefit of retention, the company may consider retaining existing employee subject to their policies. However, this approach can be flawed. H comparing to the cost of new and existing employees may yield misleading results due to individual differences. So, opportunity cost model tells about it represents the value of next best alternative. In this method, an employee's value is estimated based on their potential use of other roles, locations, or time periods. For example, transferring an employee incurs an opportunity cost. This cost can increase for highly skilled employees who are in demand across the different units or locations. However, this model can lead to internal competitions and potentially undervalue employees. So, this is the process of measurement. Through three processes, the HR accounting can be measured. One is cost approach, next one is replacement cost model, and third one is opportunity cost model. Now, we will be discussing on economic value approach. This approach is based on the idea of economic value generation or contribution of human resources to the company's gain. This means it says about the valuation, value generation, or contribution of human resources to the company's gains. This approach assumes that HR or human resources as an asset to drive a return from investment made on those assets. Under this method, the economic value of an individual can be calculated using two methods, mainly monetary as well as non-monetary. Monetary measures to assess the value of individual are Kramholz model, the Leib and Schwartz model, Heckman and John's competitive bidding model, Hermanson's unpurchased goodwill model. So first is Helmholtz model. According to the Helmholtz model of economic value, an individual's worth to the company is determined by the present value of their future services. An employee progress through their career, their role, and contributions evolve. The model calculates the cumulative present value of these services. This valuations involves uncertainty, which is considered in two dimensions. The first is expected conditional value, which represents the potential returns of the organization which may generate from the employee. The second is expected the realizable value, which factors in the probability of employee remaining with the organization and contributing to its good. The model's stochastic nature. The model stochastic nature allows it to track an individual's career progression within the organization. It directly measures both the expected conditional and reliable values. This relying assumption is that employee will remain with the company and contribute to its success in various roles. So till now we have discussed about See, this many things we have discussed: concept, then objectives, then evolution, then process of human resource accounting, human resource accounting process measurement, and now we are discussing on economic value approach, and we have left the five values approaches. Then monetary approach we have discussed. Now we have to discuss about the non-monetary values. These are the non-monetary methods. Then cost in human resource assessment, advantages and limitations. So first is Flame-Holtz model. After that, we will discuss about the Levin-Schwartz model. Many Indian organizations work on this basic model of individual valuation. This model states that the value of human resource is the present value of the future direct and indirect to the individual. So it says about the present and future direct and indirect payment of the individual. While estimating the value of individual within the organization, common beliefs and assumptions are made regarding the pattern or nature of compensation of the employees, their career growth and weightage for the efficiency. The orientation of this model towards the measurement of challenges or measurement of changes in employees' value rather than employers' gain. Hackman and Jones competitive bidding model. The model of James S. Hackimian and Curtis H. Jones was based on the bidding model wherein profit center managers make a bid for the service of most valuable employee. The maximum bid made represents the value of an individual since it is estimated current worth of use of the employee among the profit centers. This model is highly appreciated as it has the potential of estimating the value of individuals and providing a base for investment for a bidders to place a high bid and encourage the performance to generate reasonable returns. One of the limitations of this model is that it possesses the features of the partial solution and it entails the every sample. It also entails the every small sample of total human resources of an organization. So it is very important part. Here the center manager can bid the service provided employee. Now we'll be discussing on Hermanson's unpurchased goodwill model. So this human resource valuation model focuses on unpurchased goodwill. It assesses the value of human resources by capitalizing the excess earning generated by the organization as compared to the industry standard. For example, if a company with 100 million of assets earn 18% returns, exceeding the industry average of 10%, the difference of rupees 16 million is attributed to unpurchased goodwill, which represents the value of human resources. However, this approach has limitations. It relies on historical data, limiting its predictive power. Additionally, it overlooks other potential unowned assets that may contribute to the organization's performance. So, overall, all the approaches are related to the organization's performance. So, what are the monetary approaches? Monetary measures to assess the value of individual. Falmhouse model, Lev and Schwartz model, Heckman and Jones competitive bidding model, and Hermanson's unpurchased goodwill model. Now, we'll be discussing on non-monetary measures to assess the value of an individual. This is human resource valuation method that assesses employee worth using non-monetary factors. It relies on ranking and rating based on specific evaluation criteria rather than assigning the monetary values. Despite its non-monetary nature, this method is often used as a substitute for monetary valuation due to predictive capabilities. It helps to evaluate employees' skills, capabilities, behaviors, and other crucial attributes that may not be easily quantified monetarily. This method is essential for understanding the true value of employees, especially those qualities that cannot be expressed in monetary terms. That is, non monetary measures to assess the value of the individual. Some measures that are generally used as non monetary measures of human resource valuation assessments are skill inventory management, it covers the various capabilities and skills possessed by an individual of an organization. Then performance evaluation by ranking and rating, potential service assessment that an individual can render to its organization, attitude management survey to measure the attitude of employees and their satisfaction level at their job and organization. Both assessment measures are complementary to each other but not substitute, where non-monetary measures can help in decision making concerning various policies and procedures. Monetary measures provide a concrete evidence in terms of money to decide the concerning investment, budget, and resource allocations. First is group value measurement. Group value measurement says the organization operates with the combined effort of, or the organization operates with the combined efforts of entire individual within an organization. An individual might be unproductive or less valuable to an organization, but his productivity within the group or team might be different. Maybe the person is working individually, which is not efficient for, but the person when he is working in the group, it is quite efficient. Thus, along with measuring the value of an individual, it is essential to assess the group value as well. The various models of group valuations are Likert and Burrows model, Brumet, Palmer's and Pallis economic value model, human organizational dimensional method, valuation of expense center group. First is the Likert and Burrows model. Burrows model. To assess the value of group within an organization, this approach involves three-stage process. One is causal effort, intervening variables, and output and end result. The causal factors are controllable organizational elements like structure and managerial behavior. Intervening variables such as leadership, organizational climate, group processes, and employee satisfaction that mediate the impact of causal factors on outcomes. The combination of causal and intervening factors ultimately determines the organization's result. Next is Brumet, Falmouth, and Pallis economic value model. Similar to above stated monetary measures, this model follows that value of human resources of an organization is the present value of future services that these resources may be expected to provide to the organization. On the such basis, their valuation can be made. This value of group of human resources is estimated contribution to total economic value of the firm. That means this model says about the total economic value of the firm. Next is human organizational dimensional method. This model also advocates and works on the premises as suggested by the Likert and Bowers model, that is, intervening variables get influenced by the causal factors of an organization and thereby determine the result of an organization. So this models advocates the Likert and Bowers model, that is, intervening variables get influenced by the causal factors of an organization, thereby determine the result of an organization. Then valuation of expense center group. This method was proposed by Falmouth and Assesses group, value using three methods of cost such as capitalization of compensation, replacement cost of employees, and original cost of human resource of a group. So this valuation of expense center group associated with the three methods or associated with the three methods of cost such as capitalization of compensation, replacement cost of employees, and original cost of human resource of a group. Cost in human resource assessment. The organization incurs various costs throughout the employment journey of an employee within an organization. This cost may be identified and ascertained to know the real worth and value of the human resource, or the value of the employees in the organization. So this cost can be divided into three parts or three types. Those are acquisition cost, start cost, developmental cost. These are the costs which are related to the human resources for assessment. So first is cost in human resource assessment. One is acquisition cost. These are the costs or expenses incurred by an organization to acquire human resources such as cost of recruitment, hiring, placement and orientation, and training of newly joined employees. Start cost. These are the costs of that organization it incurs to start the working or employment relationship with new joiners of an organization. These are the costs that firms incurs on induction, social interaction within the organization, and cost and time incurred during the initial period of service to acquaint with the organization. Next is developmental cost. From time to time, organization runs various management development programs, learning and development programs, etc. All these costs are beneficial for any kind of organization as they develop and let an employee grow in the long run. But the cost a lot to an organization. So these are about cost in human resource assessment. So what we have studied till now, let's have a glance. First of all, we understood about introduction of human resource accounting. Then we got to know about the concept of human resource accounting. Then we discussed about the objectives of human resource accounting. Then we discussed about the historical development of HRA, or we can say evolution of HRA, which is coming under your 5 stages. Stage 1 from 1960 to 71, stage 2 1960 to 66, stage 2 is 1966 to 71, stage 3 1971 to 76, and stage 4 1976 to 80, and stage 5, which is redesigning or renewal of interest of human resource accounting, that is 1999 onwards. So here are the explanation of all the stages. Now then we discussed about process of human resource accounting. Then human resource accounting, a process of measurement. On this process of measurement, we have discussed about cost approach. Under the cost approach, we have discussed about replacement cost model and opportunity cost model. Then we discussed about the economic value approach. Two approaches are there, cost approach and economic value approach. Cost approach is divided into two parts, that is replacement cost model and opportunity cost model. Whereas economic value approach is again divided into two parts, that is monetary and non-monetary assets to value the individual. Under this monetary measures to assess the individual, value of individual, we have discussed about Flamhouse model, Leib and Schwartz model, Heckman and Jones competitive bidding model, and Hummerson's unpurchased goodwill model. On non-monetary method, we have studied. On the non-monetary method, we have studied about the skill inventories, management, performance evaluation, potential service assessment, attitude management survey. These are the things we have studied. Then we discussed about group value measurement through 4 models, that is Likert and Bowers model, Brumet and Flamhouse and Paley's economic value model, organizational dimensionals model, then evolution of expense center group. Then we have discussed about Likert and Podal model. So here we have discussed valuations of expense center group, cost in human resource assessment. Cost in human resource assessment, we have discussed about acquisition cost, start cost, developmental cost. So now we'll be discussing on advantages of human resource accounting. So far, quite an understanding has been made of a concept of human resource accounting. Based on such information and understanding, it can be understood that human resource accounting provides substantial advantages to an organization. Obviously, through this model, we are able to calculate or able to measure the cost of employee as well as managers in the organization. And also it provides the human resource accounting reports. Those are human resource accounting is a source of valuable information about human resource of the company. Such valuable information develops a base for managerial decision making. Crucial decisions like new recruitment, promotion, transfer, job rotation, job enlargement are taken using these accounting tools and techniques. It helps in enabling the organization to identify its strength and weakness and potential threats. With with continuation, we can find or we can discuss the advantages of human resource accounting. The human resource accounting facilitates the effectiveness of management policies and procedures related to human resources. It is a tool to access and ascertain the present as well the future potential worth of an employee as an individual or as a part of a group. With the HRA system, assessments of investment and returns are made. Now, the information generated from human resource accounting helps in controlling various human costs of an organization so that human resources of an organization can be utilized effectively and profitably. So here we can see the advantages of human resource employees. It helps in attracting the future investors. It helps in better human resource planning. It enables better utilization of human resources. It helps in providing timely training and development. It facilitates the formulation of HR policies. It also motivates the employee and attracts better candidates. So these are the advantages of human resource accounting, which is very essential to get to know all these things. Now comes to the limitations of human resource accounting. We have as like advantages of human resource accounting, there are certain limitations too. Those limitations are it is similar to human resource audit as recommended but not a mandate. Human resource accounting also is just a recommended and thus does not have any specific guidelines and procedures for measuring the cost value of human resources. It may reveal the misleading information while the valuation of human resources because the demand for compensation and rewards might be higher when there is a shortage of supply of human resources. The tax structure and legal compliances does not consider human assets. Thus, this accounting system just remains the theoretical. The human resource accounting system has the various methods and tools for human resource valuations, but not all are widely accepted. So this is the disadvantages of human resource accounting. It is quite difficult to value and measure the human assets as they are social animal. They do not remain the same in terms of productivity and efficiency as physical resources of an organization. It is quite difficult to measure the performance because organization cannot assure whether it is skill and knowledge of an employee or the motivation and engagement level. So human resource accounting methods are based on certain assumptions which may not stand valid and relevant in some institutions. So there is universal accepted of human resource accounting unlike the financial accounting. So these are the things which are the very disadvantage or we can say the limitations of human resource accounting. So we can again study it because it is quite difficult part. as we have discussed in the whole PPT about the advantages, what are the benefits of human resource accounting. Here, it is similar to human resource audit. It is as it is recommended but not mandated. Human resource accounting also is a just recommended and thus doesn't have specific guidelines and procedure for measuring the cost and value of human resources. It may reveal misleading the informations while the valuation of human resources because the demand for the compensation and rewards might be higher when there is a shortage of human resources. The tax structure and legal companies do not consider human resource or do not consider the human effort. Thus, it is accounting system it remains theoretical. The human resource accounting has the various methods and tools for human resource valuation. But what happened? But all are widely accepted. So, it is quite difficult to value and measure the human assets as they are social animals. They do not remain the same in terms of productivity and efficiency as physical resources of an organization. So, it is quite difficult to measure the performance because an organization cannot ensure whether it is skilled and knowledge of the employees and employee or the motivation and engagement level. Human resource accounting methods are based on certain assumptions, those are which may not stand valid and relevant in some situations. There is a universal acceptability of human resource accounting, unlike the financial accounting. So, till now we have discussed, if we will have a glance on human resource accounting, we can see, first of all, what is human resource accounting? It is the conventional accounting system which do not provide all the essential and required information on the cost and value generation of the employees of an organization. Such information can be gathered through human resource accounting. The concept is that it is about collecting and analyzing the quantitative data of employees' compensation, practices, and its benefits. It is an accounting process of identifying, classifying, measuring, summarizing, interpreting the results that related to human resources of an organization, and those human resources are none other than employees as well as the managers of the organization. The report can be shown to the employee, managers, and outside of the investors also, which will reflect the culture, the structure of the organization in the labor market. So, these are all about our concept of human resource accounting, or it is the process of identifying and measuring the value of people within a company. This information is crucial for management to navigate the changes in the quality and the quantity of the workforce. It ensures a balance between the required resources and available human capital. So we have discussed about the different objectives of the human resource accounting. Though we have various objectives, it helps in develops reliable measures of the effectiveness of the human resource of the organization. It brings out a process of effective measures to support human resource audit process, to know effectiveness of human resource policies of an organization. It helps in service-oriented firms essential or entails the huge investment. Then it supports the financial decision making. The inherent nature of the human resource management is qualitative decision making or quantitative data on which crucial decision can be taken into further enhance HR functions. Then we have discussed about Likert, what he has mentioned or what he identified. Then we have discussed about the evolution of human resource, that is stage 1, stage 2, stage 3, stage 4 and stage 5. From this, as I have already discussed twice, that till stage 4 it was like product life cycle of HR human resources. After 1980 onwards or after 1999 onwards, there was sudden renewal of interest in HR, in the field of HR. Then here is the description of all the stages. Then we discussed about the process of human resource accounting. So this is the process. First, we have to find out the objectives, on what basis we are going to do the human resource accounting. Then we have to develop measurements. Then human resource accounting database we have to find out or we have to develop. Then pilot testing will be done. Then implementation of human resource accounting system into the organization. So the various approaches was there, the cost approach and the economic approach, economic value approach. Under the cost approach, we have discussed replacement cost model, opportunity cost model. In economic value approach, we have discussed monetary measures to assess the value of individual and non-monetary measures to assess the value of individual. Under the monetary measures, we have discussed Flamholtz model, Lev and Schwartz model, Hackman and John's competitive bidding model, Hermanson's unpurchased goodwill model. In case of, here are the description of those models. In case in non-monetary measures to accept individual, we have discussed, these are the things we have discussed. Then we discussed about the group value measurement, what is the use of it. Under this group valuations, various models are there, that is Likert's and Boer's model, Brumet, Flamholtz and Piles economic value model, human organizational dimensional methods, valuation of an expense center group. Here are the descriptions. Then we have discussed about the cost in human resource assessment, acquisition cost, start cost and developmental cost. Then we have discussed about advantages of human resource accounting, then disadvantages of or limitations of human resource accounting. So in overall this chapter, the human resource accounting involves identifying, classifying, measuring, summarizing and interpreting the data related to organizations' human resources. It goes beyond tracking HR expenses against the budget, encompassing a broader perspective. The concept emerged in 1960s onwards, evolving through 5 stages are proposed by Eric G. Flamholtz in 1999. After that, again, renewal of HRA was done. Assigning monetary values to HR dimensions, which possesses significant challenges, making human resource accounting a complex process. The two primary approaches are cost method and economic value method, through which we have calculated to get to know also the human resource accounting process. Despite its limitations, human resource accounting has gained increasing popularity and remains valuable tools for all the organization. So these are all about our human resource accounting system of human resource planning. Thank you.